$200,000. Don't round me up yet. We said we said $200,000 in December of 2024. And yes, I still think it's in play. What we will need in order for that to happen is to see this strong acceleration of ETF flows that I predict will happen. I think we could get $10 to $20 billion in flows in Q4 alone. If we see that and reasonable corporate and government buying, I think 200,000 is a reach, but still very much possible by the end of the year. One thing crypto loves to do is to go all in on one asset. It's always and only Solana. I think the easier play right now is just to hold both ETH and Solana. The space is big enough to accommodate two, and we're talking about many trillions of dollars of market opportunity. I think they'll both do really well. The thing I'd shout out for Solana is it's tiny, right? The thing we forget about Solana is it's 1/25th the size of Bitcoin. And so even a little bit of interest in Solana from traditional investors could really increase that price.
According to Matt Hougan, the debasement trade is one of the key factors influencing today's markets. Advocates of cryptocurrencies have long cautioned that the value of fiat currencies will be devalued by reckless fiscal policy and ongoing money creation. It was written off at the time as fringe chatter. However, such notion has increasingly gained popularity. According to Hougan, the debasement narrative is being adopted by Wall Street itself. JP Morgan and other big institutions are even reporting on it. Advisors and investors are finally recognizing what Bitcoiners have been saying for more than 10 years. Currency devaluation is fundamental and inflation isn't temporary. As traditional assets struggle to preserve real value, institutions are turning to the hardest assets on the planet, Bitcoin and gold, as their modern hedges against a declining dollar. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Well, it's hard not to watch prices, right? We're at all-time highs on Bitcoin's price. Every other asset is pushing in that direction. So we're looking at prices, we're looking at flows, we're thinking about a lot of new ETPs to launch. It is a fun time to be in crypto right now. Yeah, I think there are two things that are going on. One is that the debasement trade has become the hottest trade on Wall Street, right? JP Morgan is writing about it. Everyone is suddenly concerned about fiat currencies. And so they all want to get exposure to the two best plays in that space, which are Bitcoin and gold. For what it's worth, I think that fact accelerates into the end of the year. One thing people don't think of much is that when institutions and financial advisors sit down with their clients at the end of the year, they want to show them that they had the hottest trade of the year. Last year, they wanted to show them that they owned NVIDIA. This year, they're going to want to show them that they own Bitcoin and gold. And so I think that's going to drive additional interest. The second thing that's driving results is just flows into Bitcoin ETFs. We've seen $3 billion in flows in the first 5 trading days of October. That's nearly a record for a 5-day period. We think Bitcoin ETFs are going to set a record for flows in Q4. We're seeing Morgan Stanley and other wirehouses coming into the space. So I'm really excited about that. Flows in the debasement trade, put them together, and Bitcoin's at 125 and going higher. $200,000. Don't round me up yet. We said we said $200,000 in December of 2024. And yes, I still think it's in play. What we will need in order for that to happen is to see this strong acceleration of ETF flows that I predict will happen. I think we could get $10 to $20 billion in flows in Q4 alone. If we see that and reasonable corporate and government buying, I think 200,000 is a reach, but still very much possible by the end of the year. I don't think it's Bitcoin pulling it along. In fact, based on the conversations I'm having with financial advisors and institutions, they've now realized that there are two major trades in crypto. There's Bitcoin as digital gold, and there's Ethereum and Solana as platform for stablecoin and tokenization. I'll say with my TradFi audience, that stablecoin and tokenization story is almost stronger than the Bitcoin story alone. Certainly on a relative market cap perspective, I think we're going to see very strong flows into Ethereum ETFs. I think we may see extremely strong throws if we see Solana ETPs launch in the next few weeks, which I expect. Wall Street is waking up to this stablecoin and tokenization idea. I don't think it's Bitcoin only. We now have two big stories in crypto, and that makes the whole space much stronger. Well, to be clear, I think both ETH and Solana are going to be extraordinarily successful. I think ETH, as you mentioned, has the leading market share in stablecoins and indeed in the tokenized space. It has huge benefits from decentralization, it has huge penetration and use, massive developer network. I own a lot of ETH and I'm very bullish on where it's going. I think what I said was Solana is the new Wall Street. By that, I meant that the architecture of Solana is designed to facilitate sort of instant transactions in the view of the beholder, right? Sort of settlement, not quite settlement, but processing within 400 milliseconds, confirmation in 2 seconds. That is the kind of speed that Wall Street needs. I think both will be successful. I think the wrong play for investors right now is to try to pick and choose a winner in the stablecoin and tokenization space. The right play is to invest broadly in that space and be happy whoever wins. One thing crypto loves to do is to go all in on one asset. It's always and only Solana. I think the easier play right now is just to hold both ETH and Solana. The space is big enough to accommodate two, and we're talking about many trillions of dollars of market opportunity. I think they'll both do really well. The thing I'd shout out for Solana is it's tiny, right? The thing we forget about Solana is it's 1/25 the size of Bitcoin. And so even a little bit of interest in Solana from traditional investors could really increase that price. You could see a doubling or a tripling of price if it becomes a favored asset amongst TradFi. That does make it unique from Ethereum, which is, of course, about 5 times bigger.
According to Hougan, the cryptocurrency industry is expanding too quickly, despite the concerns of some. It's known as catch-up growth. The business was slowed down for years by regulators who prohibited widespread DeFi innovation, tokenization, and ETFs. In the background, however, infrastructure and technology continued to progress. It's finally releasing all that stored-up potential as regulations begin to loosen. Hougan is still cautious, though. Progress may stagnate once again if important pieces of legislation, such as the Clarity Act or the eagerly anticipated market structure bill, are not passed. He cautions that Washington itself poses a greater risk than the technology. Innovation is being frozen, and ETF applications are being slowed by government shutdowns and policy delays. It's odd, as Hougan notes, that the world's most progressive industry is now waiting for Congress to merely reopen so it can proceed. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Yeah, if you just look at the sort of calendar of SEC time-based approvals, you would think we are a few weeks away from potentially seeing those ETPs. I think that's going to be big in a number of ways. One, it's just an access vehicle, but two, it means that firms like Bitwise and others that are launching will be out there doing meetings with people, educating them about Solana. When I look at Solana right now, I think it's one of the best setups for a crypto asset that I've seen in my 8 years of being in this space full time. You have a wave of ETFs potentially launching. You have really strong treasury companies led by charismatic leaders that are pushing the narrative. You have the stablecoin and tokenization play that people are very excited about. When you put those three things together against an asset that, again, is only a little over $100 billion in size, that's a pretty exciting setup. So I'm very optimistic for Solana for the next few months. It's not the dominant player in this space. Again, Ethereum has a larger market share. Some people are skeptical of it because of the meme coin overhang and the view that it's oriented around that space. It has historically run into technical issues. So there are always risks in every investment. But again, in 8 years, I'm not sure I've seen a setup that's as clean as this. And I'm really excited. So I think layer one thinking from institutions would do that. Layer two thinking would say that proved that it can handle the actual throughput required to do mass tokenization on chain. So I actually find it a very useful example. And as people get their hands around that and they start to see other people embrace it, I think they'll come to that realization. A story as old as time is new technologies first being used for slightly goofy things. People criticize the internet in the earlier days for its primary uses, but look where we are now. I think people will make that realization in Solana. So the initial response during the heart of the meme coin mania was to bucket Solana in that space. But I think people now realize that was just a great proof case of the technology's throughput. I think it's gone from a negative to a positive, and I think Wall Street will realize that as well. I mean, we're very excited. We're working to get our index fund uplisted into an ETP. Hopefully that will happen. I think that if it does, that will be a great tool for investors. The other place that I'm spending a lot of time thinking about is what is, again, the second derivative of a massive explosion in people using stablecoins and tokenized assets. And I think the answer there is DeFi. If you have suddenly 1 billion people that are familiar with wallets and how they work, what percentage of them will move into the DeFi category? I think a very high percentage. So I think if you look at what's going on at something like Aave with the huge spike in TVL, I think that's just a tiny down payment on where that protocol could be going. I think people haven't warmed up to how much stablecoins and tokenization will drag along the DeFi space. Given its small size, I'm very excited about that space as well. I think it's like more like a DeFi quadrennial. It's like a period of years for DeFi. I think DeFi, it will eventually be 10, 20, 30 times bigger than it is today. Again, imagine a world where 1 billion plus people are using crypto wallets every day for stablecoins or to access tokenized stocks. In that world, what percentage of them are borrowing, lending, staking, doing derivative work? It's not zero. And if it's 10%, that's a massive explosion of DeFi uses. I just think that space is lined up well for a many-year bull market. It's not clear exactly which protocols, if they already exist, if new ones will launch, but I wouldn't be short DeFi if you are bullish on stablecoins and tokenization. I think that's missing the forest for the trees. Yeah, look, it's a network effect market. So just look at the largest ones right now. Those are the easiest bets to make, but it's also a very dynamic and early market. So I wouldn't by any means buy something and then go away for 5 years and look back and see if you got the winner. I think this is a space where you want to diversify, own maybe the 5 or 10 largest assets, and periodically update your view, because a hyperliquid can come out of nowhere with a great design and a great community and become systematically important. But most crypto investors, burnt by the aftermath of DeFi summer, have taken their DeFi allocations down to zero. I suspect that that's the wrong place to be, given where this market is going.
Matt Hougan presents an intriguing picture of the direction the cryptocurrency market is taking in his talk, especially with regard to DeFi, stablecoins, and tokenization. He begins by outlining Bitwise's efforts to uplist their index fund as an exchange-traded instrument, which would greatly facilitate investors' access to a variety of cryptocurrency exposures. However, he claims that the true change will occur in the second wave of adoption, which will be fueled by the billions of individuals who will soon use tokenized assets and stablecoins. According to Hougan, a significant percentage of those customers will inevitably switch to DeFi lending, borrowing, staking, and trading on blockchain platforms after that. He cites the significant increase in DeFi total value locked on protocols as merely an indicator to the future. According to Hougan, this marks the start of a multi-year DeFi expansion rather than just another brief DeFi summer. As cryptocurrency wallets become commonplace tools for stablecoins and tokenized assets, he estimates DeFi could increase in size by 10 to 30 times. Since new players like Hyperliquid might appear out of nowhere and completely change the market, he suggests that investors diversify by owning the top 5 DeFi protocols rather than placing all of their money on one. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.